Hi everybody, I'm sergiok.kilembe from Trading Wall Street TV, and thanks for joining me for this week US market weekly reports. Okay, let's begin. Here we have the Dow Jones Industrial Average. You can see these large sideways movements, this bullish wick we are in a inside wick candle. You can see here the convergence between the 4 weeks moving average and the 8 weeks moving average. So that means no volatility, sideways movements, and we expect a cross from the 4 weeks moving average below the 8 week moving average in direction towards the 21 weeks moving average. And you can see here the spreads between the convergence of these 2 weeks moving average and the 21 weeks moving average, and that spread means volatility. So we can have huge volatility if we have a continuation of that downside. That's for me the greatest probability right now. Move towards the 21 weeks moving average, which coincides with these past supports, past resistance here, 1 time, 2 time, and now it's a support, and that also coincides with the supports of that trend line over here. And you can see that the 1800 points is 18,000 points is very critical, a very critical zone. We had a bullish week, but in an inside week candle, buyers volume starts to increase and come closer to the average, but it's not enough. We need more, and to break up, to break higher now. So as you can see, I'm expecting more power and more move to the downside. Here you can clearly see that we have a support. We're trying to break lower 1 time, 2 time, 3 time, 4 times, but always came back and closed higher. But now we are trading below those 2 moving average, the 4 weeks and the 8 weeks moving average, and the target for me is a pullback towards the 21 week EMA. Then we bounce over here, and then we can go back up to retest to try to break above these all-time highs. But first of all, it's going to be more healthy for the markets to go lower. And you can see here the pattern, upside, sideways, upside, sideways, pull back, then boom, break, and then we can continue higher. Now let's have a look at the diamonds, the ETF, and it's the same scenario. We see here these sideways movement, trading in range over here. We have a bullish week, close below the 4 weeks moving average, and the convergence between the 4 weeks moving average and the 8 weeks moving average, that causes a range movement, inside week candle also, and that fires a great probability of trading downside, as we already seen with the Dow Jones Industrial Average. That's the same scenario over here. We see the huge gap between the convergence of the 2 moving averages and the 21 week moving average. Here you see that uptrend trend line, support zone over here at $180 in the same level as the past resistance. Now it's a support, so that's what I'm expecting. Going back here, bounce, and then boom, going up to trying to break for the 2nd time the all-time highs, and then continue higher. But for the moment we are here, and we are expecting more bearish sentiment. Okay, let's continue now. The NASDAQ composites, and for the composites here at the resistance, we can clearly see here indecision. We are rejecting higher prices, and we are in a sideways movement. For last month, the month of August was a sideways movement. We are trading and operating in range with no direction, still above the 4 weeks moving average. You can see the spread between the 4 weeks moving average and the 8 weeks moving average. We have touched the 8 weeks moving average but rejected it, so we push higher. But if we take another look of the NASDAQ composite, you can see here that uptrend channel. You see the support levels, the resistance levels, here the support level, and here the resistance level. So we are already in the resistance of the uptrend channel, also in the all-time highs resistance now. So a pullback can occur. So now, below the 8 weeks moving average, boom, going back towards the 21 moving average, towards the 5,000 points is going to be more healthy. And so as you can see for yourself over here, we have here a huge spread between those two. So that means volatility, but when you look at the volume, you see the volume of the buyer's volume, starts to increase and reach the average, but that's not enough. That's not enough. Maybe, if we have if that trend, if that sentiment, that momentum towards the upside can maintain itself, so yeah, we can break higher and then go towards the 5,400 points, but if we cannot, going back towards the past resistance over here, now a support around the 5,000 points, I see more potential of for the composites to going down and then bounce over here at support and then going back up. So watch out, Now let's have a look at the NASDAQ 100 here. Same scenario, we are already in all-time highs, still above, a close spot on right on the 4 weeks moving average. You see here we test the 8 weeks moving average, going down, was rejected, and then came back up and closed right around the 4 weeks moving average. But here you see this spread here, and if market is going down, as you can see here, these two candles are sending us a message that sellers are coming in and the volume is closer to the average. Now we have buyers coming back, but with great indecision, and that is not enough. We need more buyers, more volume, and more decision candles, like this over here, to break higher. If not, if sellers are stepping in this game, and they really can push prices lower, and the targets will be these past resistance. Now you see that's the region of the 21 weeks moving average, so coming back here below at 45.40 and then bounce back up, or maybe trade lower and break here these the supports, the uptrend channel supports over here, and going back lower. But there is a great probability for scenario A, break below the 8 weeks moving average, boom, bounce here at the 21 weeks moving average, and then boom, going back up, you know, to sustain, you know, that uptrend channel, that bullish sentiment. Now let's have a look at the QQQ, the ETF, the NASDAQ ETF. It's also the same thing. I will start looking at shorting some stocks, you know, and for the signals that the price action was sending me, you know, this one can be, if we have another one like this, it's gonna form a tweezer top, but for the moment, that's a signal for me. That's a signal that markets can go higher, you know, but just to that point. From this point for the 4 weeks MA here at 117 towards the 118. So that's not enough, just $1, you know, to the upside. But I see more potential towards the downside, you know. Here below the 8 weeks moving average, that's a trade probability that I'm making over here, you know. For me, there's less risks, you know. Even if you put your stop over here or your stop there, you know, the gap, the spread between the 8 weeks moving average and the 21 moving average, but there's a greater probability and a greater reward, you know, towards the downside. So me, I'm expecting, I'm waiting for a signal. If I have a signal towards the upside, but I want to see the market, you know, cleaning up and breaking higher. But notice that we are already here at the channel's resistance, so it's gonna be pretty tough, you know, when you hit your resistance level typically, and the more obvious and the more typical is a rejection or a sideways movement. As you can see here we have the kind of the same scenario, and then going back a little bit lower. Here we visited that past resistance, now support, and then trying to come back, boom, bounce over here at support, and then come back, breaking that resistance over here and come back. So the market could do the same here, going back lower and bouncing back up with more power and with more strength, you know, to break that particular resistance over here, and then maybe started to trade higher. Look at the volume also, you know, we have great sellers volume over here, and we need more volume on the buyers side, you know, to convince me and other investors that prices can climb higher. Okay, enough said. Now let's look at the S&P 500 first. As you know, I like to kind of have a look at all the sectors to see the big winners and the losers on the weekly performance map. And here you see technology is doing great, except for Microsoft. You see the financials, great week for Wells Fargo, JP Morgan, and PNC. Credit services, investing, everybody in the financials doing great. Here are the services, great. It's mixed, but more weight on the winners on the green side, except for Disney, here Costco, and Dollar General Corporation. Starbucks bad week, CCL bad week, you know, company likes L Brands, and here Macy's, a bad week for Macy's, minus 5%, you know, in a week. The consumer goods overall it's green, except here in the textile industry. Nike minus 1.39%, and here the Apple clothing in the other side of the textile industry for UA, Under Armour, you know, very, very bad week, minus 8.45%. Industrial goods is mixed, going higher but not that much. Utilities green, great week. Healthcare see it's mixed in the drug manufacturers, you know, but bad week for BMI, ABBV, and LLY, excuse me, and BBMY, and biotechnology bad week. You see the GILD bad week, AMGN bad week, CELG a bad week, good week only for Biogen Inc. and medical app. It's mixed. Drugs, it's mixed. No, bad week. Medication mixed. Now basic materials also is mixed. You know, you see the great losers like ConocoPhillips minus 3.25%, EOG minus 1.41%, oil and gas. You know, you see the BHI great losers, and SLB Schlumberger Limited, you know, a bad week. Here the others, oil and gas pipelines, had a great week. Refining and marketing in oil, great week also, and specialty chemicals also a great week. So that's it for the sectors map on the S&P. Now let's go back to the charts, and here you can see that sideways movements, indecision. You know, sellers start to come in, step in. You see a convergence between the 4 weeks moving average and the 8-week moving average. Last week was a bullish week, but in an inside week candle. So what I'm expecting, more sellers and pushing towards the support over here. You see that trend line here. The support region coincides with the 21 weeks moving average, a past resistance over here, now a support. So look at the spread between those two moving averages. So that's there is more probabilities for the markets to come back here, and maybe also it can break below and come here. We test that past support over here, region of the 52 weeks moving average, and to break, maybe come here, first of all, come here, bounce here, come back higher, and trying to break up, you know. Now let's have a look at the SPY, the ETF. Same scenario, bullish week, inside week candle, more indecision, convergence between the 4 weeks and the 8 weeks moving average. Probability is more towards the downside to retest that past resistance. See past resistance, resistance, resistance. Now supports here in the region of the 21 weeks moving average, also the trend line supports over here. So a bounce, boom, coming back up and trying to retest and to break higher, or more power to the downside, and we have another support over here in the region of the 52 weeks moving average. But first of all, I'm expecting this move. Look at the spread between those two moving averages and this one. There's where the volatility is, and really to go towards the upsides, I want that level of the 220 to be cleared, a break and a close higher. That's gonna convince me. But for the moment, no. For the moment, I'm more bearish on the market. Even if we see here that buyers volume coming closer to the average, but it's not enough. You know, I need to see confirmations, and that's not a confirmation. That's just a stabilization over here and a proof of that conversion between those two moving averages, sending me a signal of no volatility, of markets are gonna be flat, you know, sideways movement, and more potential towards the downside. Now let's have a look at the VIX volatility index. Here we go with the VIX. You see the VIX still lower. We see a spike here. We break above the 4 weeks and the 8 weeks moving averages. We see here a convergence. That means no volatility, but we have the 21 weeks moving average or higher, you know, over here. So that's a direct response of that particular difference, that particular distance is a volatility. You see the VIX spiking higher now, a reversal, but look at the reversal from the 21 weeks moving average towards the other two moving averages. We're already in divergence mode, you know, so look at the volatility that we had those past 2 weeks. So now I am expecting the markets to, and the VIX, excuse me, to stabilize around that level. But you know, we already had that signal over here, and that can occur in the next in this month of September. You know, we can see another intent of the VIX to go higher, you know, and really the targets now, you see this range over here, and now we can have the same range but between 12 points and 18 points. So that's huge spikes and more volatility. You know, we have a lot of volatility, so be careful. Okay, now let's look at the Russell small caps, the Russell small cap here. And now a greater look, you know, at the Russell, you know, a fantastic run during all summer, you know, all summer, 8 weeks straight bullish. Now we are not so far from the all-time highs. You can see a gap over here, a past resistance, so at a 1270, and markets can still go higher. You know, we have a little bit of indecision over here, but that indecision was neutralized. We are still above the 4 weeks moving average and the 8 weeks moving average. You see here the trend line, the bullish trend line. We have a gap here at a past resistance level, so maybe markets can come down, bounce over here at the 21 weeks MA, and then boom, going back higher. But for the moment we remain bullish on the Russell small caps companies. You know, we see here a type of a pattern. You know, we have more power to the upside, and so we can have 1, 2, or 3 weeks or a few bearish candles, but you know, overall the Russell 2000 remain bullish. Now let's take a look at the IWM, the ETF, iShares Russell 2000 ETF. Same scenario, you know, kind of indecision 2 weeks ago, and now we have that not confirmation, but a signal of a continuation of a restart. You know, that's small confirmation because we remain above the 4 weeks moving average, and now we are expecting a continuation above 124.50 and to go towards the all-time highs over here. First of all, we have that resistance area around 126 and 50, yeah, $126, you know, that's gonna be yeah, that's our resistance. And then we have that spike, you know, that whole time spike at $129. But here we start to see, you know, that the spreads between the 4 weeks moving average and the 8 week moving average, it's going slider, you know, it's going tiny, it's becoming more tiny. So that means less volatility and maybe a convergence. You know, if there is a convergence, as you can see in the past that occurs, you see that volume starts to decrease, you know, but now the volume and the momentum remains towards the upside, so we're still bullish. but we always keeping an eye, you know, on key levels, and a critical one was this one that passed resistance around the 116, and over here you see the 116, that's a support, so it can come here and bounce at the 21 weeks moving average, and then go back higher. You know, we have a big spread over here, so that means volatility. Okay, now let's have a look at the bond market. Bond markets. Now first, the US 10-year treasury notes. You see now the yields. First of all, we are at 1.6%. We had that triangle over here, you know, that bearish triangle. You see here the resistance level, and here the support, ascending support, making lower highs. We see here a break below, a break above, you know, and we have reached the downtrend, this bearish trend line over here. That's a resistance. Also, we had the 21 weeks moving averages as a resistance. We are in a sideways movement inside week candle. We rejected lower percentage, lower yield percentage, you know. You see here that bounce, that rejection at the trend line support over here. So now we are clearly above the resistance, and we want to see more power towards the upside and the yield curve to start increase and to reach 1.70%. Okay, now let's have a look at the tradable ETF, and we see here that bearish flag, you know, that triangle, you know. You see here the support level. We break below, we also break below. You see here that bullish trend line, you know, break below that support, and we rejected higher prices, so we remain here in sideways, but now we can go lower here below 131.50. we can go back and reach the levels of the 52 weeks moving average below the around the $130, you know. We see the pattern, you know, go up, sideways, going up, sideways. Maybe we're gonna remain here sideways, you know, because you see that huge shadow over here of that particular candle. It's sending us a signal of potential sideways movement, you know. Here is the resistance, and here the support, so we can see the prices start to doing zigzags, you know. But now we have more power to the downside, because here we rejected that higher prices. So maybe next week we can still, if we remain below the 4 weeks moving average, and then we can start to trade below. So we are expecting, me personally, I'm more bearish on the US 10-year treasury notes, CFD. Now let's have a look at the 30-year. First, we're gonna look at the yield curve. Here around, we are right around the 2.3%. You see that bearish triangle over here. See that we are in a inside weak candle. You see the resistance over here. We are still below that resistance. We are still at the convergence, you know, of the two trend lines, the support and the resistance over here. So now we are expecting more higher yield curve, but we had two consecutive bullish week in a inside week candle, you know, for the third week consecutive, even the fourth week consecutive. This is a big inside weeks candles. We rejected lower prices, and now that's a signal. So we need to see the yield curve going above 2.3% and starting to go higher to reach here. The target is the 21 weeks moving average at 2.4% and to fill this gap over here. So that's really the target. You know, you see here that convergence between those two moving average. The 4 weeks moving average, it's already above the 8 weeks moving average. So now you see here that gap between that particular moving average and those two. So that gap is that means that we can have a huge move towards the upside. So expect the yield curve to go higher. Now let's have a look at the tradable ETF of the 30-year bond. Here we have the US 30-year Treasury bonds, CFD, and we see over here that particular trend line, a signal. We see higher lows, boom boom. Now here we have a support level, break below, sideways movement, try to go higher, we reject higher prices, and then we came and close below the 4 weeks moving average and the 8 week moving average. You see over here that convergence, then divergence, the 4 weeks going lower. Now you see the spread over here between those two moving averages and the 21 week moving average. So if we reach the 21 week moving average, that's a first step, and the second step it's to break below here, because you can see that the 21 weeks moving average is acting as a trend line, you know, that gave us that bullish direction, that bullish sentiment if we break below. So now we're gonna be completely bearish and then come here to reach the 52 weeks moving average. You know, we have another support level over here, and that coincides with this huge and long-term trend line, you know, acting as a support. So the target, first of all, below 170 is 165. Below 165 the target is 163. Okay, now let's have a look at the dollar index, the DXY, US dollar index. US dollar index, you see here that uptrend channel. You see the A, the B, the C, the D, A, B, C. Boom, we fail for the D, break below that uptrend channel support over here. You see the break below, that's huge. That's a huge with that huge bearish candle. We see an inside weak candle, a rejection, a reversal, and we're trying to reach to lower prices, but that was rejected at around 94 points, and then boom, we are starting to coming back higher. But you know, you see here that spread between the 21 weeks moving average, the 4 weeks moving average, and the 8 week moving average, and then you see here we're trying to reach the 52 weeks moving average. All of the moving averages are in a convergence, you know, so we have a support between 94 and a resistance between 96. So maybe we can have more sideways movements, you know, and we can start a, you know, that pattern, you know, over here, a down step stairs, a down a bearish step stairs pattern, you know. Over here we have the reverse, but now maybe we can have that continuation, and that's a big A, a B, C, and maybe a D. So I'm gonna do this like that. So maybe we can have this like that, you know. I'm gonna which color I use? I'm gonna use let's say no, that color, you know. You can have that particular movement over here one time, and then here, boom, this another time. So that's a probability, you know. So I repeat, the probability we can have one, we take another one, this one, boom. You can also take a look with that with Fibonacci's, you know, but you know, just doing that on a very simply is that to simplify things. You look at this, you see the spread between that resistance and that support over here, and if you take that, put that way, so you know, around $90, you know, here. So that's it. Okay, so me, I'm expecting the dollar to trade in a sideways movement. So for those of you guys who are trading the forex markets, you know, the euro and all of the the dollar crosses, you know, euro dollar, the pounds dollar, dollar ruble, yuan dollar, and all that stuff. So take care of that, you know. Maybe we can remain bullish for another week, so we can go back, we can reach the 96.50, but overall I remain bearish, you know, on the dollar. See the dollar going back towards 93. Okay, so that's it for the US. Now let's have a look at commodities, and we're gonna start with here with crude oil. Now crude oil, let's have a look at the big picture. As you already see, I'll talk about these big head and shoulders, reversal head and shoulders. Now we are here in these right shoulders. Remember, it's not a perfect design, a perfect drawing, because this is all probabilities, you know. This is technical analysis. This is based on probabilities. So you know, we can take this one as the left shoulder, or this one. With me, I take all of this region, because I have over here I have that huge resistance. So that's one, here that's two, and here maybe the third point, you know. So me, I'm expecting, you can see here those trend lines over here. We break above here, a perfect, you know, retest, and then boom, bounce higher towards that particular resistance over here. We see that trend line respected it, so now boom, going below the 52 weeks moving average, acting as a support. Now we come to retest. You see we have a close above that particular trend line, but that is not enough, you know. We need to clear that $59.50 a barrel, you know, level, and then boom, be above the $52 a barrel, and then go higher towards the $60 a barrel. Me, I remain bullish in the long run, but you know, we had that rejection of that particular resistance level. You see a cross below all of the three first moving averages, the 4 weeks, 8 weeks, and 21 weeks, and now we are going back towards the 52 weeks. So it doesn't matter, we can come here, retest, bounce back, and then going back higher. So we expect we are seeing, you know, you can see here a pattern, you know, a step stairs, a bullish step stairs pattern, you know, and A and B coming back here and here. So as we did with the dollar index, we can do the same here. We take that here, we come here, and you see that that's perfect, you know. That's perfectly what we expect. So we can do the same thing here. You can take that here, you can do it like that, just simply, you know, without any indicator, you know, just like that, you know, boom, because this is probabilities, you know. The market are always going to move around certain numbers, you know. So we can see here that was the same thing. So me, I'm expecting the market, I remain bullish, you know, on this one. So this is for the crude oil, the WTI. Now LCO, the Brent oil, and that's exactly the same scenario, you know. So you see here a A, B, C, D pattern, and now A, B, C, boom, a D around here. So it doesn't matter, you know, we can go sideways over here. Markets, the prices of the Brent barrel can come back to retest that particular support level around the 52 weeks average. As we can see over here, we can come here and bounce and then boom, go back higher. You see here we have a tiny gap, and we need to clear first of all that resistance. We have a resistance over here at $50 a barrel, and another one over here at 53, even 54, 50 dollars a barrel, and then we can reach and climb higher, you know. But take a look over here at that particular level. That was a very, very critical level, because we have that long, like from August of last year until November of last year, so 3 months of completely sideways movement, you know, range market. So that can happen again, you know, over here since the beginning of since the beginning of June till now. We are here in that particular range market, you know, sideways movement. So I'm expecting me markets to go higher, but first of all, lower prices in Brent oil can occur, you know. Over here I'm expecting maybe markets to come to retest the 54 level, maybe 40, and then boom, bams higher. So you see here the pattern, the bullish step pattern, you know, here big correction, and then boom, starting the pattern all over again. So now, as we did with the crude oil, we're gonna do the same thing here. Oh, excuse me. Boom, just like that. We take this, like that, like that. You see, boom. And then if you come here, we do this, you know, exactly the same thing, you know. So make it simple, you know, always make it simple. And you can add a Fibonacci, have a look at it. Fibonacci, you know, from here to here, see the retracement. This is small retracement, you know, around the 17%, 68, and then boom, market can climb higher. So that's it. Now let's have a look at gold. Quick look at gold. First we're gonna do the solid metal, you know. So we are here in this sideways movement. You see the triangle formation over here, break below, boom, came back here at this resistance of $13 an ounce, and then, you know, we're trying to break lower below that particular bullish trend line, rejected the 21 weeks moving average, come to close higher, you know. The convergence between the 4 weeks and the 8 weeks moving average already occurred. We see here rejection, so that means lower highs, you know, over here. But now boom, I see gold is gonna come and retest, you know, that particular past resistance, now support, you know. Perfectly coincides with the $1,300 an ounce level here, and now we are expecting a bounce. That could be, you know, that bounce, you know, over here, and then boom, and going back higher. You see the pattern, you know, boom, going up like that. So that's it. Now let's have a look at the ETF GLD. Same stuff, you know, over here. You see, boom, up, sideways movement up. You see here that particular trend line, boom, we are trading below. A rejection over here of the 51 weeks moving average, come close below the divergence, the convergence first, and now we are still in that particular convergence. You know that you see here the 4 weeks and the 8 weeks convergence, divergence, other convergence. So we're gonna see a sideways movement and maybe a break above, you know. Once we're gonna start to break above 128, boom, this is gonna be we're gonna try to climb higher, you know. But first of all, we remain here in that particular inside week candle. You see the volume, the bearish bullish volume at the average, and that's a good signal, you know, because that particular resistance support level was held and rejected lower prices. So now we expect a continuation and more buyers, more value buyers to step in, and we need a confirmation, you know, because to clear that particular resistance is going to be pretty tough, you know, to have that continuation. You can take a look at the big picture, you know. We are here and we need to clear that level. If we clear that level, target will be the 140. We see over here was the past resistance, $140, and then 150, and then boom to the max highs, you know. Now silver. Okay, silver, and for silver it's pretty much the same, you know, range, you know, that big signal over here, that long shadow with these other shadows, that's a signal, that's a tweezer top, you know, over here at that particular resistance. We rejected that resistance level over here with a tweezer top. Tweezer top, that means market starting to fell off. You see here a convergence between the 4 weeks moving averages and the 8 weeks moving average, and then the divergence, that means volatility is kicking in. The target, the 21 weeks moving average. You see, when you always see that, you need to calculate, you know, that the gap, you know, when you see that cross happen, look at the 21 weeks moving average. That's the next target, you know, and you see that always coincides with a past resistance, now support level. You see the gap over here, boom, boom, coincide with that particular past resistance, now support, and also with the trend line supports over here, that bullish trend line supports over here. Now we have a reversal, a rejection, so we are in a inside week moving inside week type of candle. So now what do we expect? We are waiting and looking for a confirmation of that particular reversal, that particular rejection, that's bullish rejection, bullish reversal, and then we want to see, you know, a close above the 4 weeks moving average, another close above the 8 weeks moving average, climbing and coming back towards the $20, you know, $20.50 dollars an ounce, and then going back to the 21.50 over here. But you see the pattern, you know, going up, sideways, boom, a break, going up, going back to retest those past resistance, now support, then going up, a break, up, now we have that resistance, coming back to retest the past resistance, now support, and then boom, moving higher. So we can be bullish, but you know, we need silver to trade above the 4 weeks and the 8 weeks moving averages. Okay, in the past weeks or along the month of September. Now let's have a look at the SLV, the Silver iShares ETF, and that's the same scenario. We see over here that break below, you know. Now after that perfect convergence between the 4 weeks moving average and the 8 weeks moving average, you see silver started to trading lower with that huge gap over here. That huge gap was already filled, and then now is, you know, the same pattern occurs here. So what I'm gonna do over here, I'm gonna draw, I can draw over here that particular channel, you know, so we can do it like that, boom, we can draw it in green, and this we can do it like that. So you know, over here resistance, support, resistance, sideways, boom, bounce over here at the support. You see, always when there is a convergence, look where is the 21-week moving average acting as a support. You see over here, support. Now bounce perfectly at that region, support, past resistance, and then boom, going back higher. So now we need a confirmation, a close above the 4 weeks moving average. Now we need a close below the 8 weeks moving average and confirmation to going back to 1950 and then 20. Okay, so that's it. And now we're gonna finish with Bitcoin versus the US dollar. Remember, we already discussed that, we already analyzed that big cup and handle, really that's a mirror, you know, that's the opposite that occurs over here, boom, and then now the cup here, the handle, and we are expecting the Bitcoin to go higher. But you know, that particular signal of the Bitcoin prices started to trading lower. We have that particular price over here. Here we have like 6 weeks of a inside week candle. You see here a small channel, you know, a trend line, lower highs, boom. You see the pattern, boom, boom. Now over here we clear that level, we break above, a confirmation by a bullish candle, a small one, a tiny one, but we are above that particular resistance over here, above the 4 weeks moving average and the 8 weeks moving average. You see the convergence of those three moving averages, the 4, the 8, and the 21. And you see the 52 weeks moving average acting as a support over that particular region, a perfect resistance, you know, that's perfect over here. So you see also that level, we're already trying to reach that level. So what does it mean? The market can come here, we can have that a continuation of the sell-off, come back here and then bounce here. Or maybe now if we have more decisions, bullish decision candle, so we can come back, but we are still in a inside week candle. You know, we need to be above, you know, that particular candle over here. One is going to be above 643.45. Then chances are that we can climb higher and reach the 720. So that's it. Remember that cup and handle, as we see here, as you can see here, that boom, boom. So now we need to do that boom, rejection over here. You see, look at this one, 4 weeks to the downside, another one, and then boom, going higher. So maybe that's it. Now we are in a sideways movement, but we need more pressure, more buyers need to be coming in, because you see the pattern, it's like that and like that. So I'm gonna do something very simple, just this and that. You see, you take a look at this, we come here, take a look at that, you see, bam, bam. So now maybe if we take a look at this like that, if now the movement is finished, so if the movement is finished, so that could be a projection, you know, for the Bitcoin to do bam, going back here and here, doing going back towards 800, 850. So that's a probability, you know, but we need confirmation first. Okay, that's it for the charts. Now let's have a look at the economic calendar. Starting Monday, September the 5th of 2016, what do we have for the US macro and microeconomic data? We have data, you know, on Monday in Europe. For the US, we have nothing on Monday. Now on Tuesday, what do we have? We have data in Australia, in Switzerland, in the EU, in the US. We're gonna have, you know, data at in the afternoon. Exactly, we have an important data release at 4 p.m. ISM non-manufacturing PMI from August. Then nothing of great importance. On Wednesday, September the 7th, what do we have in the US? In the US, for the US, what do we have? Yeah, we have data at 1 p.m. We have data in Canada at 4 and at 8. We have some type of data release and something at the Fed. And then on Thursday, September the 8th, what do we have for the US? No, nothing for the moment. Yeah, at 2:30. Here, watch out for ECB press. That's the European Central Bank. So for those of you who are trading the euro dollar, so watch out for that particular news. We can have you can have like intraday volatility, and that's it. For the US, not of great importance, for the rest of the day. Yeah, in Canada we have a speech. So for those of you who are trading the US dollar versus the Canadian dollar, Bank of Canada, a speech from Mr. Lane, so another type of intraday volatility. And on Friday, September the 9th, what do we have for the US? For the US, that's not of great importance, That data release over here, that balance of trades can affect, people trading the pound versus the US dollar in the forex market. But none of great release, of great importance, We have a speech for Mr. Rosengren at 1:55, and we have data release at 4 p.m. The wholesale inventories month from July, but none of great importance, for that second week of September. So people, all right, that's it for this episode. Thanks for watching. Subscribe, share, comments, and bye, and have a successful trading week. See you guys next week. Thank you. Bye bye.